Hello, this is Steve Malone with CompassFX. Hope you're doing well and you're getting some good trades. Don't have much time today. I've got to run, but I want to give you a quick tip so you can put some pips in your pocket. I see this happening over and over again, and I'm going to illustrate something to you using the dots indicator. You don't need to have the dots, but it definitely helps you to determine potential targets, okay? But at the start of a session, there's certain things that you can do over and over again regardless of what session you trade. So if you trade the Australian session, the Tokyo session, European, London, New York session, you're going to be looking to do the same thing every session from the open. And this is simply this. You're going to look to trade away from the open. So as the market starts making a move away from the open, that's the direction you want to trade. Now, the dots will come in handy because if you'll notice that the next target level is pretty tight, you may not want to trade that pair. You want to have a pretty decent distance to that first target away from the open, something like 10 to 20 pips at least. But what I want to do is quickly show you, I'm going to go from the Australian session to the European session to the US session using the Aussie dollar, and you can pick any pair you want. But I want to show you over the last number of days what's transpired trading that session away from the open. And let's just take a look. So here we see currently right now as I'm doing this video, we can see we're trading away from the open. It moved right to the target down below here. Now when these get pretty close to the open, be cautious that the market doesn't just come right back at you. The open here was 88.28, so only about 6 pips there. So you want to watch to see that the market actually moves beyond and attempts to reach that next target. You're looking for that target to be about 10 to 20 pips away from the open. So we hit that one. You can see here, now that moved up. Now that's one of those situations where the market potentially moves up, falters over, and then it moves down to that next target. So you got to look for that. If it moves away, be ready to quickly take it and be prepared for the move away from the open. Let's take a look at this. Move away. Moves away. Moves away. We're looking at 10 days here. Moves away to a target. Away to that first target there, that sell entry target. Away. Now it did kind of bebop around here a little bit, but it did move up to that first target there. Now what I'm looking at is the market moving to that buy entry or sell entry level using the dots. You don't have to do that, but I'm looking to trade away from the open. It did it again right there. And we have one more day where you can see how the market traded away from the open. And that is in the Australian session. So that's based on the Aussie session. Go over to the European session. Let's see what took place in the European session. Same currency pair away from the open. Away from the open. Again, away from the open to that sell entry level. Here's a nice move right from the open and away from the open. Again, here this market kind of bebopped around a little bit, but away from the open again. And this one pushed away from the open. Now, you know, you might be thinking to yourself, well, go back a sec, Dean. What if I'm going one direction, the market flips on me? Then what you want to do is you want to be getting out of that trade if it crosses back over and holds on the other side of the open. Now, I'm up on a 30-minute chart here, so I can kind of crunch the chart down a little bit so you can see this, but if you were to trade this down like on a 5-minute or 15-minute chart, you can see it start coming back and closing, and you probably had a swing low right there suggesting the market was going to turn. Come out of that trade, turn the trade, and be willing to trade it back in the other direction towards that buy entry level. So we have that move away from the open, away from the open, and again, another one away from the open. Look how many times this does this. Look at this one. Away from the open to the buy entry level. Then it falls over, crosses this little threshold between the sell stop loss and the buy stop loss level, comes down and hits right at that. I mean, look how many pips you're collecting right off the open of the session. And here's another one right there as well. Now, jumping forward, let's take a quick look at the New York session. Again, I'm just looking at trading away from the open of a session. So you can see here obviously today a big leap when that retail sales number, PPI numbers came out and the Dow just dropped today. So we had a big move here. But let's just take a look. The market moved away, didn't quite reach up to the buy entry level, fell back over, but then eventually moved away to the sell entry level. On this, right up to the buy entry and then the buy target number 1 level. Again, down from the open to that sell entry level. The market pushed back up, went to the other side of the buy entry level. You see how many pips there's a possibility of collecting right off the open here, trading away from the open in the direction of the candles. I'm not using any Heikin-Ashi bars or range bars. I'm just using simple candlesticks, trading away from the open of the market. You can see here how it kind of bebopped around a little bit, and you probably had a swing high in this, and then it rolled over and right to that sell entry level, not being able to get up to that buy entry level. And again, here's another one up right from the open of the New York session. Again, down. That's a pretty good move down. Obviously a really good move down that day. But you see, I did all 3 sessions using the Aussie dollar. You can pick any currency pair you want, any session that you want to trade. Just simply be looking to trade away from the open of the session. And you're looking for the market to move to that sell entry level as a target or the buy entry level as a target at the open of that session. If the market continues moving that direction, even better. Trade then onto that sell target number 1 or buy target number 1 level, and maybe even further out to that buy target number 2 or sell target number 2 level. But again, the trading tip I want to share with you today is to trade away from the open. If you want more information about the DOTS indicator, go over to www.compassfx.com/DOTS and you can learn more about it. Well, folks, I got to run. Y'all make it a great day. Get some good trades and trade away from the open, and we'll talk to you next time. Bye-bye.